Marvell stock is down over 14% after reporting earnings, and I believe the market is making a mistake and is creating a great buying opportunity for me. But is this a better buy than Nvidia? I'll actually answer that question within the next 60 seconds, but first, let's understand what's happening to Marvell. Now, if we take a closer look at the past 52 weeks, Marvell is back to the levels we saw in March 5th of 2024. And this is after the stock peaked at $127 in late December. Now the stock from its overall peak is down over 40% or nearly 40%. Now, if you have been following my channel, you guys know that I wasn't a huge fan of Marvell north of $100. But this is the time when I will gladly add more to my position. Now, one of the reasons and discussions coming in for Marvell and for this huge price drop is the company did not meet the expectations or did not excite investors or Wall Street with their overall guidance. But I don't think that's necessarily the case. I mean, sales for the next fiscal year was guided at about $1.88 billion, which met in line average analyst estimates. Unfortunately, it did not meet the high range of about $2 billion. I honestly don't think it's guidance that caused this drop. I think it's the uncertainty within their AI business, and I'll cover that throughout the episode. But first, let's tackle that other question I had. Is this a better buy than Nvidia? I'm actually going to say both yes and no, and I'm going to give my examples and my reasons why in a bit. But first, let's look at valuation. So if we look at forward PE ratios, which is the next fiscal year, the end of this current fiscal year, so about 12 months for both companies, Marvell, if you include the drop now, is closer to about 28, where Nvidia is about 26. So valuations on a forward within the next 12 months basis are very similar to each other. Now, Marvell in forward 1 year, which is about 24 months from now, including this drop, drops down to about 21, 22. Nvidia's right now at 20. So if we look at valuations and analyst expectations, we can see they're closer valued after this drop. Now, I believe Nvidia is the stock of stocks if you believe the AI market will continue to grow dramatically. Nvidia is the king of AI, and that's why it is my number one position. I believe Nvidia will continue to dominate, and I believe the AI market will continue to grow. Now, Marvell is a stock that I would say is very similar to AMD in some regards, that it has the growth opportunity of AI, but it can also be fueled by its other markets. So if one is looking for pretty much a pure AI play, the answer is no. Marvell is not a better investment than Nvidia. But let's say if I was looking for a diversified play where I had some AI diversification and some other markets diversification, then I would say yes. And throughout this episode, I am going to explain about the diversification of Marvell Technologies. But if you want to learn more about the semiconductor first, make sure to check out my daily newsletter, whatthechiphappened.com. The link is down below. So let's get started with the rest of the episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first, let's kind of understand a little bit more about Marvell's market. And their data center market is their biggest revenue driver right now, and it's the biggest revenue segment for this company. Right now, it makes up about 75% of total revenue, maybe a little bit plus or minus a few percentage points. And you might be wondering, Jose, you just mentioned in the intro that Marvell is a diversified play, but if their data center market is so huge, isn't this very similar to Nvidia? Now, I'm going to explain, we're going to see in a bit, that their other core markets have been very weak, but eventually when they pick back up, we are going to see more of a diversified play for Marvell. But some highlights for the data center market is their custom AI silicon, and they help big customers and big tech develop their own AI chips. Their custom AI silicon ramp has ramped to high volume production. Now, they expect Q1 revenue to grow in the mid-single digits sequentially on a percentage basis, driven by continued growth in cloud and AI demand. And I think this is where one of the big issues has come out for Marvell in forms of the AI data center market. If we look at this most recent quarter, data center revenue actually grew 24% quarter over quarter. But now you're telling me for the next quarter, you're only expected to grow about mid-single digits on a sequential basis. So is there something slowing down Marvell's data center market? The other thing is, now that we have the fiscal year of 2025 ended, we can see that in forms of numbers, this does not look like a better stock because of AI, right? Fiscal year revenue only grew very small single digits. They're actually down in operating margins. They're also down in gross margins. But they are up on earnings per share. So overall, the numbers don't look like an AI stock, right? Nvidia, for example, is growing revenues at massive numbers. But here's the kicker. If we look at their summary revenue by end markets, all of their other markets, especially those that have played an important role like enterprise networking, was down 50%. Carrier infrastructure was down 68%. And the reason it doesn't look like it is because it's completely diversified and the other markets were making it seem very, very weak. Now, I believe fiscal year of 2026, which is the year that they just started, we will see a turnaround story and we will start to see strong revenue growth. Now we can see here in the enterprise revenue was about 171. It was up sequentially, but still down year over year. But they expect quarter one revenue to grow. Now, if we look at the carrier infrastructure, very similar. They expect growth in quarter one as well. Now, the automotive market, they do expect single-digit sequential decline in quarter one due to strength in the automotive market, but weakness in the industrial space. So overall, though, we are kind of seeing a nice momentum in its overall end markets. And like we saw previously, their end markets outside of data centers were pretty weak. So now this story can help fuel this fiscal year 2026 revenue as becoming an AI play, because they'll have the tailwinds from the AI market and they'll have huge growth opportunities from their overall core products. Now, if we look at financial outlook, they gave an outlook of about $1.8 billion in revenue. And this was, again, pretty much with consensus, and it will represent a 60% year over year growth. Now I want to take a closer look at some growth on AI space and unfortunately some of the worries that the market might be seeing. So first, they talk a little bit about their expectations for this fiscal year based on past guidance. So in their April 2024 AI Day, they mentioned that for this fiscal year, they were expecting about $1.5 billion in AI revenue. They mentioned that they have exceeded that number. And for next fiscal year, it's about to be about a $2.5 billion target. And they believe they expect to very significantly exceed that number as well. So Marvell unfortunately didn't give us the actual numbers of how well they exceeded and how well they think they're going to exceed next fiscal year. But again, we can see this is definitely not an Nvidia, where Nvidia is making these kinds of money or this type of revenue probably in a few days in AI market. They made over $34 billion in data center revenue this past quarter. This company did $1.5 billion this year, and they expect to exceed $2.5 billion next year. So we can see definitely different stories. Now, luckily, they did mention that they have seen some design wins with Meta for custom NIC solutions. And again, they provide a lot of semi-custom solutions. They also mentioned that their custom business continues to gain momentum. They mentioned that 2 leading AI custom programs are on high volume production, and they expect growth to continue. One of this is a custom ARM CPU, which they expect will see expanding adoption at their customers' data center. The second program is for a custom AI XPU, which is kind of like a GPU for the AI market, which is also performing extremely well with significant volume production ahead. They also mentioned in parallel, they're fully engaged with this customer on the follow-on generation of this XPU and planning for a production ramp once it completes its sampling and qualification cycles. As a result, they expect their revenue from custom XPUs for this customer to not only grow this year in fiscal 2026, but continue to grow next year in fiscal 2027 and beyond. They also mentioned that they announced a new design in AI Day in April of 2024 for another custom AI XPU with an additional US hyperscaler. And they believe that they are well on track to meet this customer's desired schedule to start production in calendar of 2026. This engagement is also multi-generation, and they expect to result in a very significant amount of incremental revenue for Marvell over the next several years. So the market, I think, was expecting maybe a lot of this revenue to be happening maybe in the first half or even in this quarter. I think the market is very impatient, but there is the optionality and opportunity for Marvell to get this revenue later on throughout this upcoming year and the upcoming years as well. Now, I believe there are two things that are worrying investors right now. Well, maybe a few. Obviously, the macroeconomics and all these fears about AI data center spending is one. The second thing is during the Q&A session, there was a question of there are reports that one of those XPU customers is moving on to one of their competitors. And management said that with respect to the question that our customers may be working with someone other than Marvell on the next generation XPU, it's just something we can't comment on. What I can comment on is visibility for the products that we will be building for the customer. And as I said, this extends to the next generation of our current AI XPU program. So they're pretty much just saying, hey, look, at least we have visibility for this generation and next generation. But it didn't kind of calm investors of what happens with the generation after that. Now, the next worry is Nvidia last week, I believe, for earnings, and they mentioned the following, that just because a chip is designed doesn't mean it gets deployed. And you've seen this over and over again. There are a lot of chips that get built, but when time comes, a business decision has to be made. And that business decision is about deploying a new engine, a new processor into limited AI factory in size, in power, and in time. And our technology is not only more advanced, more performant, it has much better software capabilities. And very importantly, our ability to deploy is lightning fast. So I think the market is also worried that, hey, look, if a lot of these chips are taking longer or longer than the market expected, can NVIDIA's next GPUs that will be coming out during that timeline, are they just going to be so much better than what these custom ASIC solutions are that customers at the last minute can say, hey, look, it makes no sense for us to build it. I think we're just going to go with NVIDIA chips. So there is that risk, in my opinion, for Marvell. But again, there is always going to be room for multiple players in this space. Now, if you're looking for a pure AI play, I think NVIDIA is the stronger player. If you're looking for somewhere where you can diversify the risk by having a bit of exposure in AI, a bit of exposure in other industries, then Marvell might be the overall player. But in my overall portfolio, NVIDIA is still going to be number one. Marvell's not going to be anywhere near number one, but with this price action, I would definitely enjoy adding more. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.